Here's something that'll blow your mind. The average American invests their money with zero strategy, paying 1% in fees to fund managers, while a boring Vanguard index fund does the job 85% better for just 0.05% in fees. That's like paying $1,000 a month for a personal trainer who gets worse results than a $5 app. Today, we're diving into the Vanguard Balanced Index Fund Admiral Shares, or VBIAX, the fund that almost nobody talks about, but should absolutely be in your conversation if you're serious about building wealth. Let me be clear, this is not a get-rich-quick play. This is a get-rich-slow play, and slow is actually the secret sauce. So what exactly is VBIAX? Think of it as the lazy investor's dream fund. It's a single fund that gives you instant diversification across thousands of stocks and bonds. Specifically, it holds 60% stocks and 40% bonds. That 60-40 split is basically the Goldilocks zone. Not too aggressive, where you're losing sleep every time the market dips. Not too conservative, where you're basically earning nothing. The fund automatically rebalances itself, meaning it sells winners and buys dips without you lifting a finger. It's the closest thing to autopilot wealth building that actually exists. Here's the math part that matters. If you invest $50,000 in VBIAX and it returns 7% annually, which is the historical average, after 10 years, you'd have roughly $98,000. After 20 years, around $193,000. After 30 years, you're looking at $380,000. And remember, you did absolutely nothing except buy it once. You didn't check it daily. You didn't panic sell during crashes. You didn't try to time the market. You just waited. That's the power of compound interest working for you while you sleep. Now let's talk about the Admiral Shares part, because this is where it gets interesting. Vanguard has different share classes. There's the regular investor shares with a 0.17% expense ratio. Then there's Admiral Shares with a 0.05% expense ratio. The catch? You need a $50,000 minimum investment to even get in the door. But here's why that actually makes sense. If you're serious about wealth building, you should have at least $50K set aside for long-term investing anyway. And that tiny 0.02% savings might sound insignificant until you realize over 30 years the difference could be $8,000 to $15,000 in your pocket instead of Vanguard's pocket. Every basis point counts. Now, pattern interrupt. Here's what most finance bros won't tell you. VBIAX underperforms the stock market in bull years. When the S&P 500 goes up 25%, VBIAX might go up 17%, but here's the twist. In bear years, when stocks crash 30%, VBIAX might only drop 18%. That 40% bond allocation is literally insurance. It's boring, but boring is profitable. Let's talk about the biggest mistake people make. They compare VBIAX to 100% stock index funds like VTSAX and say, why would I accept lower returns? The answer is risk tolerance and sleep quality. If a 30% market crash would keep you up at night or, worse, make you sell at the bottom, then the 40% bond cushion in VBIAX is worth its weight in gold. It's not about maximizing returns. It's about maximizing returns you can actually stick with. Here's another pattern interrupt. Your age should probably determine your allocation, not your greed. If you're 25, maybe you want 80s-20 or 90-10 stocks. If you're 45, 60-40 is perfect. If you're 65, maybe you go 40-60 bonds. VBIAX works best for people roughly in their 30s to 50s. It's the Goldilocks fund for the middle of your working years. So here's your action step. If you have $50,000 sitting in a savings account earning 4%, which is basically inflation, you're losing money in real terms. Open a Vanguard account, takes 10 minutes, and dump that 50K into VBIAX. Set it to automatically reinvest dividends. Then, literally forget about it. Check it once a year max. Let the power of compound interest turn 50K into 200K plus over the next 30 years while you focus on actually earning more money and building real skills. The boring truth about wealth is this: 90% of millionaires got there through consistent, long-term index fund investing combined with increasing their income. VBIAX is the index fund part. Your job is to handle the income part. Learn a skill, get a raise, start a side hustle, whatever. Together, that's how you actually get rich. If this video helped you understand index funds better, smash that like button and subscribe for more ETF deep dives. Drop a comment with your biggest money question. I read every single one. And remember, start small, think long-term, and let time do the heavy lifting. Thanks for watching. Disclaimer: this is educational content, not financial advice. Always consult a licensed financial advisor before making investment decisions.